Panic reigns in the markets and no one is sure of the future. The economy has always had and will have ups and downs. It is easy to get through the good times, but how do you get out of the hard times unscathed? Also, how can you make money during it? But before we move on to that, let's see what causes economic recessions. This argument has been the subject of heated debate among economists for a good reason. A recession can be a slight decline in economic activity in a particular country that lasts months, a long-lasting setback with global consequences that could last years, or anything in between. Complicating matters further, innumerable variables contribute to the health of an economy, making it difficult to point out specific reasons. So it helps to begin with the big picture. Recessions happen when there is a negative disruption to the balance between supply and demand. There is a contradiction between how many products and services producers can offer, how many goods people want to buy, and the price of the services and goods sold, which brings about a decline in the economy. The relationship in an economy between supply and demand can be seen in its interest rates and inflation rates. Inflation happens when the price of goods and services gets expensive. Put another way, the value of money goes down. Still, inflation could be a good thing too. Economic activity is thought to be motivated by low inflation rates. But high inflation, not accompanied by high demand, can cause problems for an economy and eventually lead to a recession. Interest rates, in the meantime, reflect the cost of taking on debt for individuals and companies. The rate is an annual percentage of a loan that creditors get from borrowers until the loan is paid back. Low interest rates mean that companies can manage to borrow more money, which they can use to invest in more projects. High interest rates, meanwhile, raise the cost for producers and consumers, slowing economic activity. Fluctuations in interest rates and inflation can give us insight into the economy's health. But what causes these fluctuations in the first place? The most obvious causes are shocks like war, natural disasters, and geopolitical factors. An earthquake, for example, can tear down the infrastructure needed to produce important commodities such as oil. That forces the economy's supply side to charge more for oil products, discouraging demand and potentially prompting a recession. The following is what you need to know to become rich during times of recession. 1. Everything will be less expensive. When a person thinks this is not the right time to invest when everything's falling apart, a wealthy person would see an opportunity to buy everything at a 30% discount. Warren Buffett has shared the perfect analogy of that. He said, "When the price of the hamburger goes down, we sing, and when it goes up, we cry." People think the same about everything in life except for stocks. When the price of the stocks goes down, one can get more for their money. However, people don't like them anymore. Hence, you need to reframe your mind that even a falling market can be advantageous to you. 2. Less competition. During difficult times, companies scale back their expenses to preserve cash and play safely. On the other hand, it opens doors for smaller yet aggressive companies to come forward and take their place. A study showed that among 16,000 companies, the ones that kept advertising enhanced their wealth and got bigger with positive growth at the end of the recession. Number 3. More opportunities. Somehow, the recession is a market's way to weed out the weak ones and give opportunities to new, smaller businesses and people to develop. Patrick and David made a perfect comparison several months ago. The peak of any market is like a forest where only the highest trees get the sunlight. In our market, this means only established companies get access to resources. But just like a forest catches fire, our economies have a way of bankrupting the giants who can't sustain themselves anymore and giving chances to the smaller businesses to continue to flourish and develop. 4. After every bear market is a bull market. Yahoo has pointed out that the S&P 500 has fallen to an average of 29 around a recession. However, the stock that touched the lowest returned at 40% the following year, and in a couple of years it was 58%. This implies that investing when things are going down is more profitable than pulling out and waiting in the long term for markets to recover. It has been witnessed throughout history. 5. You have to act before anyone else knows. It is easier said than done. It seems okay to invest in recessions, however, recessions are never confirmed. For instance, the Great Recession of 2007 was not announced until December of 2008. We always find the recession when it's about to end. So what can you do? 1. Create an additional source of income. During a recession, there's always a chance of losing your job. The main goal should be to keep your current job and be ready to re-enter the market in search of a new one if you lose one. However, your financial security can be increased by creating additional sources of income. It could be a second job, an online business, or any kind of passive income. Even if you can earn only $500 or $1,000 a month extra, this additional income can help you get through the tough times if your main source of income dries up. 2. Start an emergency fund. If you do not have a sufficient reserve fund already, set a goal for how much cash you want to add each month. Your funds must be kept in a savings account at your bank. Keep funds in a reserve fund that will allow you to survive for at least half a year. This is especially important if you are in an industry that could be hit hard by a recession, such as financial services, construction, and food. If you are self-employed, you must set aside an annual cost. 3. Keep the money flowing. If you have a job, be a great employee. Now is not the time to relax. Come early, stay late, and volunteer for various projects. Find ways to save your employer money, especially if you catch your employer performing little in this regard. Start networking so that you can have a network of contacts who can help if you get fired. If you do not have a job, find several ways to make money fast. Focus on reducing your expenses, as said in the previous step, and consider becoming a volunteer. If you have free time, some organizations will need your help. 4. Diversify your investments. During a recession, stock prices usually drop sharply, so your investment accounts can take a hit. While a lot of companies and their stock prices will bounce back from a recession, some will default and make you lose money. You can reduce the risk of this by spreading your investments. Consider buying bonds, cryptocurrencies, investing in other countries' securities, or investing in precious metals. These investments can move regardless of the market and protect your assets during a recession. You can also invest in real estate, such as land or apartments, which usually increase in value over time. First, you must assess your financial condition. Sit down with each member of your family and analyze your finances. Changes in your approach to money will profoundly affect your relationship's chances of success. Now is the right time to be a role model for your kids and show them how a family can come together in difficult times and everyone can contribute. 5. Develop a risk management plan. If you haven't already, make a recession plan. This risk management plan should include a bunch of actions you plan to take if you suffer the loss of your customers or business due to an economic downturn. In the end, it will be easier to think about what to do before a recession than in the heat of the moment when your employees are panicking and don't know what to do. Be sure to write down specific steps to follow, and then communicate the plan to other leaders or partners so they can follow it too. 6. Do not cut prices. Many businesses start selling when a recession hurts them. However, this will only make it difficult for customers to justify paying your normal prices when the recession is over. In addition, these lower prices could cut much-needed profits. The only exception is that you can offer discounts to customers who are also going through hard times. Just let them know that you are only providing this service once. And remember that the crisis does not last forever, and after the recession will come the renewal and growth of the economy. It's the nature of the free market. So be prepared for a bad scenario, but always hope for the best. After a night, dawn always comes. With that, we have come to the end of this video. What do you think of these steps? Would it help you become rich during a recession? Tell us your opinions in the comments section down below. If you like this video, give us a thumbs up and subscribe to our channel. To see more videos from our channel, click on the links you see on the screen. We will meet again with another video. Until then, goodbye.